Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, the news, the analysis, so you can be informed in just a few minutes. We have an AI webinar tomorrow. Matt, tell us briefly about that.
Yeah, we got the AI Gold Rush webinar tomorrow, 7 p.m. Eastern Standard Time, 4 p.m. Pacific. Come get the watch list. It's the updated watch list. Learn a little bit about AI and have a lot of fun here tomorrow. So come join me in the AI Gold Rush webinar tomorrow evening, 7 p.m. Eastern Standard Time.
Yeah, absolutely. It's a can't miss event. Absolutely attend that. It is an RSP over SPY type of day. Your average stock doing okay. Little hesitation in the S&P 500. Semiconductors dragging down tech a little bit, weighing on the overall indices. Still a healthy technical look, though, isn't it, Matt?
Yeah, no doubt about that. Just slightly overextended here. Sometimes you get a little bit of negative news. ASML provided that a little bit here today. We'll get into that when we do talk about stocks in the news. But more than anything, just a little bit of an overextended bump in the road with that 9 EMA catching up. But it wouldn't be something I'd be too concerned about from a pure technical perspective. We are 4 or 5 bars into the breakout now, and we're about 7, 8 bars into the actual pivot formation, which typically means, Mark, we do see a little bit of consolidation over a couple days, typically in those environments, as you do start to get a little bit overextended. I don't have it generally overextended. I'm just saying contextually, from when you do go 7, 8 days from the low point, let's not get too surprised if you see a couple red candles here.
Yeah, no, it's a very normal technical action. And we just give me RSP real quick. Always, this is one of the things that we've been doing at Tackle Trading for months and months and months and months now. Like, all right, S&P down. What does that mean? Oh, your average stock continuing the ascent here.
Yeah, you're right on the nail there, or the nail on the head there, Chucky. When you're looking at RSP up, SPY down, that is a tech move, or it's a tech move that is sending SPY down, or it's a cyclical move sending RSP up. But typically we do see it as a negative towards tech and a positive towards the rest of the market. Nothing to be too concerned about here on RSP. The negative news came out on the semiconductors after the cash open occurred. And so you are seeing volatility specifically in the NASDAQ here today. Outside of the NASDAQ, basically we're seeing chalk across the board.
Yeah, absolutely. Absolutely. Not a lot to report on the economic news front. This is a light macro week as micro individual stock stories take center hold. Empire State Manufacturing Index came out, missed expectations, and it was a pretty dramatic miss, minus 11.9. But if you know this economic report, it tends to swing very wildly. Swing very wild. Yeah, big swings, and it was actually within the range. That's always the important thing. Not a lot to see here. But, Matt, we have a lot to see on individual stock stories. My goodness, there's so many. Which ones are you going to discuss today?
Well, there is quite a bit, quite frankly. We had a lot of earnings here today. This was one of the bigger earnings days of the week. You had a lot of healthcare companies, you had banks, and then shockingly, quite frankly, you had a semiconductor that was not on the calendar. ASML was slated to report earnings tomorrow morning. I don't know what occurred. That just came out in the market just recently, but ASML released their numbers. And so obviously now we have some semiconductors that we were not prepared about. And by we, I mean the royal market participants, we. I mean, everybody around the world, we. And just a brief note to ASML, there's traders that won't forgive you for releasing your earnings numbers on a non-calendar event. Earnings is extremely important, and it should be taken with absolute seriousness when it comes to not only the numbers, the interpretation of the numbers, the event itself, but there is a responsibility at the company level as well. And ASML, in my opinion, you broke that trust a little bit here today. But on to the stocks in the news here today. United Health Group came out with a miss. The issue with United Health was not just the miss on overall revenue. It was actually the company lowered full year guidance, and they lowered full year guidance due to a recent cyber attack. And so United Health had a cyber attack that ultimately led to them downgrading their guidance. And so we got a little bit of a chalk report in line is how I would describe it. But that guidance is always going to be a little sensitive, and the price action certainly did gap down here today. Goldman Sachs, Bank of America, both of those two came out really, really well. Goldman came out with a beat. Bank of America came out with a beat as well. The banks don't provide guidance. It's one of the most annoying things about the banks is that they don't typically provide guidance. And we certainly didn't get any guidance out of Goldman Sachs or out of Bank of America, but from an earnings perspective itself, they came through pretty decent, quite frankly. Now, when you are looking at them from a technical perspective, let's start with United Health here. A little bit of a gap down, but not a sell down. You gap down, but you gobbled up type scenario. Remember, they came out with a pretty decent actual earnings numbers. The problem here was on the guidance front due to the cyber attack. Usually those things get priced in pretty quickly and they move on to another storyline. A little bit of a gap down into no man's land on United Health. However, when you are looking at Goldman Sachs here, a little bit of a continuation saga as it broke out just 2 days ago with the actual sector itself breaking out. And now you're done with a little bit of volatility on top of the price action, no doubt about that, which is not abnormal for an earnings event, quite frankly. Gap up, sell down behavior, kind of fill that gap, and now you're looking at it from a little bit of volatility. And what you would like to see is that volatility subside. And when you're looking at secondary patterns, whether it's a cleaning up high base at 540, whether it's inside candlestick analysis, you're really looking for a secondary pattern here. In a recent coaches show at Tackle Trading for the Pro members, I dialed in exactly the type of gaps that you want to look for in terms of the earnings analysis, the type of secondary patterns you're looking for after earnings analysis. But at the end of the day, you want to see the volatility simmer down and give you some degree of secondary pattern there. And then on Bank of America, the Tackle 25 Bank of America, they came out with beats as well. But a little bit of a gap up, sell down behavior, not too dissimilar to the price action we're seeing in general in banks today. A little bit of gap up, a little bit of profit taking during the actual session, and secondary patterns are warranted in both the Bank of America as well as Goldman Sachs. But that's not too surprising given the fact that XLF, the financial space itself, had a beautiful breakout from 2 days ago and just looks like it wants to continue here.
Yeah, banks have been a real winner so far in this earnings season. Certainly stands out. Gold, the dollar, oil, some interesting price action as we get to global markets. Let's start with crude oil. There was a report out of the Washington Post yesterday that Israel had agreed to not attack oil facilities or nuclear sites, in response to the Iranian missile attack a couple weeks ago. Netanyahu has walked that back a little bit, not an outright denial. The selling pressure, though, has been tremendous. Just more volatility on the oil chart, right, Matt?
Yeah, that news item came out late yesterday, actually, where BB basically stated that, it didn't come specifically from BB. It came from a U.S. U.S. expert there, but basically they removed two of the situations that were a little bit concerning to oil, concerning to the market. And that ultimately was the nuclear sites or the oil fields. And it does look like from the report that came out of the U.S. yesterday that Israel is looking at a military strike instead of something secondarily like oil fields and nuclear. And why that's important for the market is because that's why the market was going up, is because there was concern that it would expand that conflict, expand that war. And so a little bit of price alleviation here today is how I see that crude oil chart. But still, same volatility here.
It's just the same volatility, different flavor.
Yeah, it's you definitely want to see that volatility subside, right? Whether that volatility is up or whether that volatility is down, you really don't have a change in conversation yet. You still have concern and you still want to see that subside there. When you do look at the other areas of the market, dollar showing a little bit of slowing momentum here today. That's going to be an ongoing conversation for the dollar. When you're looking at the commodity side, a little bit of
and here, stop me if you've heard this before. A headline, not a de-escalation, but reduce the chance of a regional conflict on that headline. Gold doesn't care about headlines that should send it down. That's been the story of 2024. Matt, this feels like the consolidation pattern back in August before you broke out.
It feels like every consolidation pattern that gold ever has before a breakout, quite frankly. And so you're looking at this situation at 2,700 on gold. That's obviously the next technical conversation that we have regarding whatever pattern we see develop at that 2,700 level. That's really where you're looking at a potential breakout of gold at 2,700. And you also have a little bit of dialing in the volatility that recently came in on silver, seeing that slow down a little bit, but we're still looking at that breakout on silver as well. Copper just showing a little bit of hesitation here, obviously a downward pressure in price, and it does look like it wants to kind of test that very important support level right around 4.3 here.
Yeah, listen, we're going to dive into, I don't know, about 10 earnings reports, full analysis in our Traders Lounge. It's going to be a poppin' lounge. Matt and I are going to be on it. You can join us every day on the lounge by going to tackletrading.com. Sign up for that free trial.